In the next 5 minutes, I'm going to explain how using trigger stocks can help you to boost your retirement fund amongst all of the crazy market volatility that we've seen in 2025, so you can hedge your bets and still make really good gains whether stocks are rising or falling. So I'm going to give you all of the details in this video because it is a new sort of stock trading strategy. And also at the end of the video, I'm actually going to give you a ticker for one of these stocks so you can go off and research it yourself and see if it matches your investment and trading needs. So if you're excited to watch the video, why not subscribe to the channel to get more content like this. Now, just something very quickly about me. I'm not a pro trader or investor. I'm just a normal guy just like you, or woman just like you. And basically I'm looking at ways of growing my retirement account and making extra income amongst all of the crazy market volatility that is going on at the moment. And I found this strategy out recently from a very smart trader, and I want to just share this strategy with you because I think it is very exciting. So without said, let's get on with it. So what are these trigger stocks? Now, they are basically new sort of kind of stocks and funds called leveraged ETFs. Now, usually, what most investors do is they buy a stock, hold it, and hope that obviously, the stock increases over the time that they hold it. But obviously, in volatile markets, stocks can not only go up, but they can also fall, which can wipe out a lot of your gains. And LETFs solve that problem. Now, how does an LETF differ from a normal stock or a normal ETF? So basically, LETFs are basically leveraged ETFs, and the clue is in the name. These funds use leverage or debt to magnify the gains of the stock or the index they are basically following. And many of these LETFs sort of offer returns of 2x to 3x of the underlying stock or fund that basically they are following. So I've got an example here. So say if you bought some shares in the S&P 500 L ETF, which is one of these leverage ETFs, and the S&P rises 1% in a day, this fund promises 2x returns of the S&P 500. So basically, rather than making 1%, you make 2% in a day. That is basically how it works. Now, these funds are really great for volatility because not only can you sort of make gains if the stock goes up of these funds, but you can also buy into funds that give returns if the stock falls. So you can hedge your bets depending on how the stock is going to basically move. And basically your returns, if you invest in these specialized funds, really depends on the amount of sort of leverage that the ETF is using and the fund managers. And typically you're going to see promised daily returns of 2x to 3x of the underlying stock or the index that they are tracking, but some of them can go up to 5x. Now, I've got to address the elephant in the room. Like anything, you can make losses as well. Excuse me. There are absolutely no guarantees that using LETFs you're going to make guaranteed money. Yes, the gains could be big, but obviously your losses can be magnified as well. So say for example, you buy into an LETF in a stock and that stock goes up 1%. Oh, sorry. Say, you've bought into a stock and the stock that you're betting for drops 5% in a day, and the LETF that's tracking that, is betting on the stock going up and it's 2x, then your losses are going to be magnified by 2. So you're going to be losing, if it drops by 5%, you're going to be losing 10%. So basically your losses are magnified. So that is basically, something you've got to consider. So how do you use these things to trade market volatility and also boost your retirement account during, you know, volatile times like we are at the moment. So basically what you have to do is, these aren't long-term holds. These are short-term trading tools, and they've only been around for a couple of years. So basically, you know, if you think, you know, a stock you're looking at is going to make a move, you know, a big move, whether it's up or down, you can just find one of these LETFs, either tracking a stock or an index, buy into it. Now, if you think the stock's going to go up, you just buy the LETF version of that stock. But obviously, if you think the stock's going to drop, you can buy an inverse LETF of the very same stock. So you can bet on whether that stock goes up or down. And the idea is you never want to hold one of these LETFs more than 2 to 3 weeks, because if you hold them for the long term, yes, you can make a lot of money, but also you can lose a huge amount of money as well. So these are short-term trading tools to hedge against volatile markets. And the key to using them properly is being able to predict when a stock is going to make a big move, either on some news or some financial data that is being released. So yeah, that is LETFs and trigger stocks. In a nutshell, they're a great short-term trading tool. If you're frustrated at all with obviously all of the volatility this year and your retirement account has lost money because stocks are over the place, or you just can't get any consistent profits, LETFs could be a really good strategy to hedge, you know, against market moves and to protect your retirement account. Now, as promised, I promised to give you an LETF stock that you can go and research. It is, I've got it written down here, it is the ProShares Ultra Pro Short, QQQ. Short means it's going to be betting against the QQQ price going up. It's the ticker is SQQQ. Go and research it. Uses 3x leverage. So if that stock drops, you know, 1% in a day, you'll make 3%. So, you know, potentially over 5 days, if the S&P 500 drops, the Nasdaq drops 5% in a week, you'll make 15%. So these are fantastic tools. So there you go. Go research the SQQQ. Now, this isn't a trade recommendation, because obviously you've got to know when to get in and out of these particular shares. But obviously, if you want to learn, I've just given you a brief oversight of these things, but if you want to learn more about trigger stocks and LETFs and how to use them properly, I highly recommend you watch Larry Benedict's presentation about trigger stocks. He's the guy who I learned this strategy from. I'll leave his presentation down below in the description below. But also, if you want to get, you know, bona fide trade recommendations of when to trade these LETFs, Larry's got a service called One Ticker Trader, where not only does he give you options trades monthly, where you can bet on stocks going up and down using options, he's also going to give leveraged ETF trades alerts as well. So if you're at all interested in that, you're frustrated with your retirement portfolio performance because of all the volatility, I highly recommend you check out One Ticker Trader and get Larry's options recommendations, but also his trigger stock LETF trade recommendations. But I'll leave that in the comment description below. I do believe you can join for 80% off, which is $79 for a year, and you get I think you get a 90 or 60 day money back guarantee. So you've got nothing to lose, everything to gain. There's loads of reports in there about this stuff, so you can get up to speed quickly. So if you want to join One Ticker Trader and get all of Larry's LETF trade alerts and his options trade alerts and all of his research on options and how to trade LETFs, highly recommend you give it a try. No risk to you. $79, absolute bargain, locks your membership in for a year. Anyway, that's what I've got for you. Hope you found the video useful and informative, and I'll speak to you soon.